Hey there traders, welcome to another market update video. Today is the 20th of April 2021 and we're going to chop and change things a little bit here. I'm only going to talk about Bitcoin, Ethereum, Bitcoin Cash and Chainlink, and then of course you can see here I've got the dollar index as well because that's relevant to what I'm about to discuss today. And I also want to make it very apparent that we will not be making market updates on all the coins that I used to anymore. I'm only going to be making market updates on the coins that are relevant and the ones that I'm looking to trade, um, in the next couple of days. So I'm only going to be focusing on less pairs, but more information on these market updates. So let's start with Bitcoin. We're on the daily chart here. So the first thing I do want to point out is the fact that we have now started to backfill on the spike low. So this is exactly what I spoke about in yesterday's video. Usually these do backfill, but it is a very high risk short position. So we didn't take the short because it is a higher risk short. After all, the overall trend is still up. And I will remain medium term bullish on Bitcoin as long as we close daily candles above this previous swing low. So if we don't take out this previous swing low and close daily candles below $50,100, I would still remain bullish on this. So with that being said, this is an area of value I'm going to be looking to buy once Bitcoin makes its way down there. I do want to point this out as well. We have a series of higher lows. We've got a low right there, a higher low right there. And if we can confirm yet another higher low from around this point, and how do we confirm a higher low? Well, we will only confirm a higher low if we take out the spike high of yesterday's candle, coming in at around about 57,633 on the dot. So if we take out $57,633 to the top, even on a 4-hour closing basis, that would be a signal for myself to go long, and that we would have confirmed this as a local low. If that is confirmed as a local low, we will then have 3 drives of hidden bullish divergence. So what is hidden bullish divergence? Let's have a look at it one more time. We have a low and a higher low, while momentum oscillators like the RSI is making a lower low. So this is known as hidden bullish divergence. Again, if we can put in one more drive of a higher low around this point, we will have another drive of hidden bullish divergence. And of course, this would be a clear signal for us to still remain bullish and continue buying this asset to the upside, looking for further extensions actually much higher than our previous all-time high. But if we do not confirm this as a local low and we do come back down to around these spots and still close as a higher low than our previous low, I would still remain bullish because we would still have that hidden bullish divergence drive. Also, another thing I do want to point out, price is still moving up. Yes, volume is coming down. That's usually not a very good sign. It's usually a bearish sign. But the momentum oscillators seem to be resetting in a bullish posture. So in other words, we can see that this is probably going to be a little bit of a meltdown, but this price will most likely be bought straight back up. Also, we do want to talk about this. If you participated in the pre-launch, you did receive a free course from us telling you and teaching you about longer term position trading. So if you go back to that course and you can remember what I spoke about in that course, we want to take major long positions, position trading from the 21 exponential moving average on the weekly chart. And that comes in around about $44,500. So do I think we can make it that low? I do think it's in the cards, most definitely. But if we do make it that low, I think this price will be bought straight back up. Or at least, very least, see a medium-term bounce from there, at the very least back up to come and test the 55 exponential wherever it is at that time. So we can see right now we're still closing daily candles above the 55 exponential. We did have some volume on yesterday's candle. basically ending off being a spinning top, or whatever you want to call that, morning star. But this will only be confirmed as a morning star, like I said, if we take out the spike high. And if we take out the spike low on a daily candle close today, in other words, if we do close below 54,252 spot 88, that's when I'll be looking for that extension much lower. So let's speak about the lower term time frames here, because I do think they are a little bit more relevant given the current price action. So for Bitcoin on the 4-hour chart, we do have this low right over here. So I'm actually going to mark this low as a very important level of structure, because as long as Bitcoin holds above this low on a 4-hour candle closing basis, that's when I'll be expecting a bounce from this point. However, if Bitcoin does make it lower, then I would still be looking to buy around here. Why am I looking to buy around here? Momentum oscillators are way down here, and we are also seeing potential bullish divergence being printed and created as we speak. Stochastics kind of crossing back down to the low side, but again, let's go throughout the history here. We see that same pattern on stochastics. We see the initial bounce. There's the initial bounce. And then we see a push lower. So now we want to see a push lower. Then we see that cross in those stochastic, just like we're seeing the cross right now. Usually after that, we have bullish divergence being printed on the RSI. And that's usually when we see those major bounces. So I'll be looking at this as an opportunity. I'll be keeping a close eye on this one. We're going to have to be patient on this. We do not want to trade too aggressively in a market like this. In the background, there's a lot of hands exchanging big numbers. And you can tell by the fact that the market is not respecting technicals the way that it usually does. That's usually when you see hedge funds and big funds and whales exchanging hands in the background over the counter trading. So OTC markets can influence the markets after a long period of time. So obviously, this entire market structure that was formed here was all a bunch of profit taking. So you can see volume going down, price going up, taking profit, taking profit, taking profit. Now we're going to create liquidity by spiking down, most likely. And once we created that liquidity, then we can look at Bitcoin moving onwards and upwards. Again, I do want to say this. It is extremely healthy and extremely normal for Bitcoin to have 30 to 40% pullbacks, even in a bullish market. Right over here, in the beginning of the year in Jan, we had a 31% retracement. Right over here, we didn't actually have that big of a retracement. We had a 25% right there. We had another 18% right there. And this current one went as low as 21%. So what would a 30 to 40% pullback look like, more or less from that high? Again, a 30% pullback would bring us to that 21 exponential moving average on the weekly chart. And that, my friends, is going to be the best area, in my opinion, to be scooping up some Bitcoin for the long term. We could even make it as low as the 200 simple and 200 exponential moving average on the daily chart, excuse me. If that's the case, then I would very much expect a bounce from this previous little accumulation area. We can see right here it acted as resistance throughout this phase, and it never got back tested as support. So more than likely we're going to see this liquid zone being met before we see the next extension to the upside for Bitcoin. But this is a major level. If Bitcoin can hold this level, we will still remain long-term bullish. Here is why we liquidated our longer term positions. After this spike to the downside and the volume on this one, we started liquidating all of our longer term positions. In other words, my long term portfolio is everything back into USD Tether, because I now want to start looking to buy as we drop lower. Preferably trying to buy down here for my next longer term position around the 21 exponential moving average, like I said, on the weekly chart. Beautifully lines up with that $44,500 level that I was speaking about earlier. So that's it for Bitcoin. Let's just talk about short term here. I'm still expecting Bitcoin to go down short term. We did confirm another lower high, excuse me, than our previous high. Do we have any hidden bullish, bearish divergence on this one? Yes, we do. So we have some hidden bearish divergence from this swing high to this swing high. So in other words, we have a higher high on RSI, but we have a lower high on price action. So do I think that move is played out already? I do believe so. I pretty much do think that it's played out most of the move from that top to the bottom. However, I do think we still have some downside potential here, perhaps even popping back down to $52,000, somewhere around here. That's when we're going to be buying some Bitcoin for a medium short-term bounce. How far can it bounce? It's most likely going to bounce back up to about 55K from this level, and then we'll reassess from there if this market wants to move lower or does it want to continue. If it wants to continue, then we'll add back into our longer-term positions as we start seeing structures broken to the upside. So we'll dollar cost average into a bullish market. Never dollar cost average into something that is dropping unless you understand exactly what you're doing. If you're brand new to trading and investing and dollar cost averaging, stick to bull markets. As the market goes up and you see a pullback, you buy. Goes up, see a pullback, you buy. Goes up, see a pullback, you buy. Okay, so looking for this one to make its way back down to about $51,000. Next one we're going to speak about is Ethereum. Very similar setup here, but I would like to buy Ethereum actually around $1,970, somewhere around here. The lowest that I do think Ethereum will be going, if it does make its way past this market structure, is going to be $1,745, somewhere around this zone right here. Go down to the weekly, up to the weekly chart. We can also see that the 10 simple is lining up with this level, and the 10 simple has been holding this trend for pretty much since the breakout after the coronavirus. You can see right here the 10 simple holding support, 10 simple holding support, a little bit of the 21 exponential there, but mostly the 10 simple has been doing the job. Right here you can see as well. So I do think that we'll see at the very least an initial bounce from that level, this level that I've been speaking about, around $1,945. That's around the 55 exponential on the daily. So for me, this is an area of value. Let's talk about the shorter term time frames. You can see right here, we're currently moving into the 200 exponential and 200 simple moving average on the 4-hour chart. Again, looking for this one to come back lower just a little bit more so that we can capitalize on buying this asset as quickly as we possibly can. So this one does look good, and I would like to buy Ethereum around here. So let's keep an eye on this one. Very similar to Bitcoin. Confirm the lower high there once again. Hidden bullish divergence, bearish divergence. Do we have? No, we do not. Okay. So this one is exactly the same pattern. So if we can get back down here, this is going to be a major buy for me in the medium term. I think this could even be a little bit of a longer term bounce from here for Ethereum. So again, we liquidated our Ethereum longer term positions around $2,250 right after we said that we were going to start liquidating. And this price has already started dropping. So right over here, if we can get a medium term bounce from this point, we're going to take it. As well as the fact that we are still making higher highs and higher lows on the daily chart, it's very difficult to be bearish on something like that. We do have the opportunity to be printing some hidden bullish divergence if we can confirm this as a local low. If that's confirmed as a local low, in other words, taking out $2,280 spot 79 cents, that's yesterday's spike high, and confirm above it, closing a daily candle above that level, that would confirm this as a local low, and we will have hidden bullish divergence between this low and this low. So that would be the next clear signal for the new all-time high being reached, and at least sweep once or twice, or just break through it and continue to the moon. So for Ethereum, like I said, the area I'm keeping in mind is around $1,970. Bitcoin Cash here, very similar setup. We have a major resistance level coming in around $1,100, but we also have a major support level coming in around $730. Now, I do want to talk about this one. Usually when we see Bitcoin Cash starting to really take off and go parabolic, we do see the pullbacks to the 55 and the 100 exponential. So this is the lowest that I do think this coin could possibly go, but I'm very interested in buying the $730 level. At the very least, going to see a medium term bounce from that point. So this one's still making its way lower. I do think short term we still have a lot more downside on Bitcoin Cash. That's why I've got the second level in here, because if we break through this one, we will buy this one because we'll see at least a short term, medium term bounce, so we can make some profits. But right over here, this is really the level that I would like to buy personally. Um, this one is lining up with a lot of confluence here. Momentum oscillators on the daily chart. To be fair, Bitcoin Cash did make it all the way up there, which is pretty phenomenal. I mean, it made it almost all the way to 90 on the RSI, which is insane. So I do think this is completely healthy, completely normal for the market to do some pullbacks, make some pullbacks. Everybody's going to take some profits, but we should see at least an initial medium-term bounce from the 21 exponential coming in around $730. Okay, we're going to keep a close eye on that one. And then Chainlink. Again, remember, I'm only speaking about the coins that I see major potential in for the next couple of days. The rest I'll just skip from now on. I won't even mention them in the market updates because they're irrelevant. So why talk about them? Okay, so on the daily chart here for Chainlink, again, still holding higher highs and higher lows here. We did have this previous little accumulation phase. So if we were to take our Fibonacci extension tool, let me just see here, all the way, well, pretty much from there, excuse me, pretty much from this accumulation zone, then we can see that our target of the 1.618 was kind of met. That's where we put in our top. And the next level that I'll pay attention to for this one is around $51.30. But I do like this level where we are currently trading. It's right at the 21 exponential moving average on the daily chart. But I do think there's a lot more volume behind yesterday's daily candle close. So I do think we'll probably pop back down to $31.37. And that is going to be a next level for me to possibly take some long positions and see a major bounce in this one. So again, that's coming in around the 200 simple and exponential moving average on the 4-hour chart. So medium term, long term, medium term, short term bounce expected from 31.70. I do think this one is going to melt its way back down here. What do we see on momentum oscillators? Possibly starting to print some bullish divergence here. If we can close a 4-hour candle below this level and we can confirm a local low there on the 4-hour chart, that's going to be a significant buy signal. So all of these coins, we're looking for some downside short term, but then we're going to start really hitting those long positions and making some money. So we just need to be patient this week because there are some decent setups. We don't want to take unnecessary trades after these major spikes, and because there's a lot of volume behind these spikes. But we do want to take some trades once we get to these areas of value. All right, let's talk about the Dixie, which is the dollar index. This one is very, very interesting to me. Coming back down, the dollar is basically tanking, getting weaker and weaker and weaker. Usually a very good sign for anything that trades against the dollar. For example, Bitcoin, Ethereum, Bitcoin Cash, Chainlink. So these trading against the dollar, dollar weakening, and these assets weakening with the dollar instead of actually strengthening against the dollar that's getting weaker usually does show that there is a major, well, not a major top in the market, but at least a medium term top in the market. And when we see medium tops in the market, we usually see something similar to this. We usually see a 30 to 40% pullback. Right over there, that was actually just a 21% pullback. Fair enough. Let's look at this one. 16%. So maybe Bitcoin has already played out its pullback here, but throughout the history of Bitcoin, 30 to 40%, even in a bull cycle, is completely natural and normal. So do I think the dollar is going to bounce from this point? I do have a level of structure in here from this previous accumulation zone before we saw this major extension to the upside. So I do think the dollar is going to bounce here, pushing most of these cryptos even lower and giving us those buy opportunities that I was speaking about earlier. All right, that's it for this video. I hope you enjoyed. Stay safe out there, trade with proper risk management, and I'll catch you in the next one. Cheers for now. Bye-bye.